Hey there, it's Mike Wise, the real Mike Wise. Last week was my avatar and gave you the weekly update. This week it is the real Mike Wise, and this week the mortgage market. Well, it was kind of interesting with the Fed meeting, and they lowered the Fed funds rate again by another 1/4%. But interest rates, they did not. Mortgage rates did not go down. So let's dive into some of the details and the news that has come out over the last week or week and a half or so. So, the CPI numbers, these were delayed numbers because the government shut down. And so they actually brought some people back in to get these numbers to calculate the Social Security increase for next year, which I think was at 2.8% increase from the previous year. So that was good news for the seniors, getting a little bit of a bump in their pay. But what CPI showed, or the inflation, which is one of the dual mandates of the Fed has two mandates. One is keep inflation intact and a full employment, and so those are their two mandates. This inflation, it eased to 3%, which is still 1% higher than the Fed has kind of been looking for. Now, in the past, they've said between 2 and 3%. So I think they're okay with the inflation. They just don't want it to go any higher. And the risk of lowering the Fed funds rate further may stimulate more inflation and higher prices and so forth. So that's what they're looking at. Now, I don't necessarily agree with the numbers that are coming out, but that's not for me to kind of know. This was, the 3% is kind of where it's been at. It's just a little bit above, a little bit below. And so they're at 3%. We think they have the inflation under control. Now, let's talk about housing prices real quick. Basically, over the past 5 months, the Case-Shiller report has basically shown that there's been a decline month over month for a total drop off of 1.1% in housing prices. Now, it reversed course in August and it went up. Now, why do you think that is? Well, mortgage rates, they came down a little bit, and that spurred the purchase market a little bit. So FHA, they see stronger growth ahead in the housing market as well. But pending home sales were flat, and so we were expecting a little bit better result from the housing sales index, but the September index reading was flat month over month, and this is even with mortgage rates dropping 75 basis points over the last 3 months. Now, if you look at the silver lining here, basically, if you just do the non-seasonally adjusted or the raw data, it was up 1.5%. So as mortgage rates drop, that means that you're probably going to see more and more people get into the market, and that's been seen in this market. In fact, mortgage rates came down, the sales activity went up, and then it slowed down a little bit as of late here. Now, the Fed, they cut rates again the second time this year. So they dropped them another 1/4%. So you can see, and I'm going to show you another graph on this, but basically this Fed funds rate has gone down. Inflation numbers, we talked about, they're going across here. Now, the interest rates, the mortgage rates have not come down on this. So let me take a look here and show you a couple of things here. This is the Fed funds rate versus the 30-year fixed rate mortgage. So the red line is the 30-year fixed rate mortgage. Now you can see this is 7.5% is where we were at. The Fed funds rate, it was here at 5.25 to 5.5% here, right? All the way up until September, almost a year ago, a little over a year ago, right? And mortgage rates, they dropped from 7.5 to 6.25 here, right? It's maybe just 6.25, 6.375. Now that was all in anticipation of the Fed lowering the Fed funds rate. So you can see the Fed, they lowered the Fed funds rate here, but this was all in anticipation that they would lower. Now, when they actually lowered the Fed funds rate, mortgage rates went up. They went up. Now, they stayed elevated here because over this period of time, we haven't seen any movement in the Fed funds rate. Now, as we start to see that there's going to be more of Fed funds rate drops, the mortgage rates are starting to drop. Now, what happened this week? Well, the Fed, they actually lowered, in fact, let me go to this screen here. They lowered, this is the yield on the 10-year Treasury. They lowered the Fed funds rate. This is where the yield on the 10-year Treasury was. It was just below. It was 398, 397, right in there, right? And when the Fed came out and lowered the Fed funds rate, the mortgage rates or the yield on the 10-year Treasury went up. It went up, and so it's now hovering right at 4.08. So it went up almost 10 basis points as a result of them lowering the Fed funds rate. So what I'm trying to tell you is the mortgage rates are dependent on the 10-year yield here. That's what we follow. In fact, this is what I was going to show you just a second ago. This is the yield on the 10-year Treasury, and this is the mortgage rates. And you can see that these two lines, they pretty much stay connected to each other, right? So as the Fed lowers the Fed funds rate, that does not necessarily mean that mortgage rates are going down. The mortgage rates are dependent on the yield on the 10-year Treasury, which is over here, right? Now, why did mortgage rates go up when the Fed lowered the Fed funds rate? Well, this is it right here. This article, which I'm not going to click on right now, but Fed funds rate cuts are far from certain after divided meeting. That means that not all the Fed governors or Fed presidents were okay with what's going on, and they're data dependent. So when the Fed chairman was asked if we're going to have a cut in December, which is what we were relying on, is basically saying you were going to have another cut in December, he basically said they are far from certain that we're going to have another cut in December. Why? Because we don't have any data. Now, that was what he was blaming it on, is basically, I don't know because I don't have the data. If we don't have the data, we can't make a good decision, which I always like data to be able to make good decisions. So I do agree with him on that, but there's a lot of signs that are showing. In fact, let's go down here to another article, see if I can get to it. Let's see here, trade, there was a jobs, basically, this week, I'm not going to get to it, but this week there was here we go, right here. So basically, tens of thousands of white-collar jobs are disappearing as AI starts to bite. Now, I think it was either FedEx or UPS and Amazon, and they basically talked about a lot of jobs, $10,000-$20,000 worth of, or 10 to 20,000 jobs that were going to be lost at those companies. So they were some big numbers to watch and see the jobs market get worse. So the Fed, they've got to really watch the jobs market to see if they're going to lower the Fed funds rate in December. So this is the December meeting, and I'm comparing. You can look at this. So these are the numbers here, right? So this is 1 month ago. So let's take a look. This is 1 month ago here. This is 1 week. This is 1 day. And then this is current. And so what I'm trying to show you is a month ago, there was almost an 80% chance that they were going to lower the Fed funds rate in December down to the 350 to 375, which is another quarter of a point. Then it went to 90%. Now, this is all last week. It went to 90% chance that they were going to lower the Fed funds rate, and now it's dropped down to below 70% that they're going to lower the Fed funds rate. So that's kind of what's driven the mortgage rates up this week. So we don't like that. That was bad news. Even though the Fed came out and lowered the Fed funds rate, their commentary was basically like the future of these mortgage rates or the future of the Fed funds rate is not going to go down much further, which told the bond market like, hey, hold on, let's not bring the yield down any further on this. It's not going to get any better anytime soon. So that's what the mortgage world was this week. If you have any questions, please feel free to reach out to me. Would love to talk to you more about it. I hope you have a great weekend. I will be available, and happy Halloween. I hope you have a great night tonight.